This capital reserve, we cannot use it for redemption, but these two amounts we can use for redemption. Out of this, there is a claim of 4,000. So 10,000 minus 4,000, 6,000 we can make use of in this workman compensation account. We need, what is the fund here in the bank loan? Bank balance, it is 10,000. So add issue of equity shares, how much you have collected? 40,000. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Street College, Temple of Excellence, MYSURU. I welcome you all to this session. In this session 4, we will be working out some more problems on redemption of preference shares. Now, let us see what this problem is all about. The balance sheet of Smriti Products Limited as on March 2016 is as follows. So we have the share capital issued, called up and paid up 10,000 equity shares of rupees 10 each, 10 lakhs, 5,000 preference shares of rupees 100 each, 5 lakhs. Then we have the securities premium 1 lakh, capital reserve 1 lakh, general reserve 2 lakhs, profit and loss account 1 lakh. Then non-current liabilities 10 lakhs, the total is 30 lakhs. Now in this we have the fixed assets 28 lakhs, and current assets 2 lakhs, the total is 30 lakhs. Now, what is the additional information here? The preference shares are to be redeemed at 10% premium. Fresh issue of equity shares is to be made to the extent required under the Companies Act for the purpose of redemption. The shortfall in the funds for the purpose of redemption after utilizing the proceeds of fresh issue are to be met by taking a bank loan. Show the necessary journal entries to record the above transactions. So we have the problem here, and then we have to just see what are the things we need here. So let us go back to the balance sheet here. So for the purpose of redemption, we should consider this 5,000 preference shares of rupees 100 each, 5 lakhs. So this we have to consider. And then next thing is whether the redemption is at a premium. Yes, it is at a premium of 10%. So here the preference share capital is 5 lakhs. So there is a premium of 10%. So we will make a note of that. First thing is we write amount needed for redemption. So what is the amount needed for redemption? Preference capital 5 lakhs. Then premium 10%. So it is 50,000. Totally it is 5 lakhs 50,000. Now, what are the things the company has made to raise this 5,50,000? Fresh issue of equity shares to the extent required under the Companies Act for the purpose of redemption. So there is an issue of equity shares, but we don't know how many to, that we have to find out. How many equity shares have to be issued, we have to find out. The shortfall in the funds for the purpose of redemption after utilizing the process of fresh issue are to be met by taking a bank loan. So after that they have to take a bank loan. Show the journal entries in the books of the above transactions. See, if you can see here, there is 5 lakhs worth of preference capital, and then if you can see here, securities premium account, we have 1 lakh. So out of this 1 lakh, we can take 50,000 for paying the premium money. Then next, this capital reserve, we cannot use it for redemption, but these two amounts we can use for redemption. 2 lakhs and 1 lakh we can use for redemption. So I will write here this general reserve. General reserve, how much it is? General reserve is 2 lakhs, profit and loss account 1 lakh. General reserve 2 lakhs. Then P&L account 1 lakh. So totally we have 3 lakhs here. But what is the amount needed for redemption? Preference share capital is 5 lakhs. So we need 2 lakhs more. So this 2 lakhs to be raised through fresh issue of equity shares. So here we have the general reserve 2 lakhs, profit and loss account 1 lakh. So total it is 3 lakhs. Then preference capital is 5 lakhs. So from the amount to be raised from fresh issue is 2 lakhs. So this we should remember. Then next is we have to see what is the value of each equity share. So here if the balance sheet, if they write 100, so we have to shares of rupees 100 only. If the balance sheet, if it is written 10, then you have to issue equity shares of 10 rupees only. So here we will write a number of equity shares. Number of equity shares equals 2 lakhs divided by 100. So that will come up to 2000. $2,000 shares of rupees 100 each. So we have to issue 2,000 shares of rupees 100 each. Then, so we will first finish off all the transactions. So here it will be 2,000 into 100, that is 2 lakhs. Yes. Then next, so we have the issue of equity shares. Then we have to take a bank loan for issue. Then we have the adjustment for this. Then for the premium amount, we have to adjust. So for the premium amount, we have the balance in securities premium account. So we can take 50,000 from the securities premium account. Now, we will write the first journal entry. What will be the first journal entry for issue of equity shares? I will write issue of equity shares, bank account debtor, 2 lakhs to equity share capital account 2 lakhs being equity shares issued. Being equity shares issued. Now, the next thing is we have to have this bank loan. So how much you need bank loan, that we have to decide. So for that we have to refer the balance sheet. So what is the balance sheet here? Balance sheet, what is the cash balance here? Cash balance given in the balance sheet is 2 lakhs. Now, out of this 2 lakhs, so we are raising 2 lakhs from the issue of equity shares. So, issue of equity shares, we are having 2 lakhs. So, totally we are having 4 lakhs. So, what is the shortfall? So, this is 4 lakhs we are having cash now. But what is the payment to preference shareholders? Payment to be made. See, here we have the cash balance of 2 lakhs. From the issue of equity shares, we have received 2 lakhs. The total cash balance at bank is 4 lakhs. From this 4 lakhs, we have a payment to be made at 5,50,000 to be paid to the preference shareholders. So this shortfall of 1,50,000, I am getting through by raising of a bank loan. So 1,50,000 I am getting by the issue of a bank loan. So I will write, so this is done. So the next one will be for the arrangement for the premium. So I will write securities premium account debtor securities premium account debtor 50,000 to premium on redemption, to premium on redemption of shares, preference shares 50,000 being premium money provided out of securities premium account. So we have provided for the premium money. Now the next one will be for the capital money. So for giving capital, so we have 2 lakhs in the general reserve, profit and loss account 1 lakh. So I write general reserve account debtor, then profit and loss account debtor. So what is the general reserve? 2 lakhs. 2 lakhs. Profit and loss account 1 lakh to capital redemption reserve account 3 lakhs being divisible profits used for or utilized for redemption transferred to CRR account. So whatever money we have transferred from the divisible profits, that we are transferring it to the CRR account. Now the next entry will be for bank loan. So we have to see here. So we have just done with this. Then we have the fresh issue of equity shares we have already calculated. The transaction relating to bank loan is pending. So we will write bank account debtor 1,50,000 to bank loan account 1,50,000 being loan raised for redemption. Being loan raised for redemption. Now the next entry is common. Fifth one will be preference share capital account debtor 5 lakhs premium on redemption of shares debtor 50,000 to preference share holders account 5,50,000 being amount due to preference share holders. So 5,50,000 is the amount due. Then last entry will be preference share holders account debtor to bank account 5,50,000. So 5,50,000 being payment made. So these are the payment which they have to make to the preference shareholders. See, this is 5,50,000. So these are the journal entries which we have to make. Now going in for the balance sheet here. So 10,000 equity shares of rupees 100 each. So for this we have to add 2,000 equity shares. So that will come up to 12,000 equity shares. So 12,000 into 100. So that will come up to 12 lakhs. 12,000 into 100. 12 lakhs. Now this preference shares are not there. It has been redeemed. So we need not write. Now in the securities premium account, there is 1 lakh. From this I have taken 50,000. So the balance will be 50,000. Now capital reserve, we don't write. We don't consider it as for divisible profit. So capital reserve 1 lakh, I write as it is. Capital reserve is 1 lakh. Then general reserve we have utilized. So profit and loss account also we have utilized. So instead of writing this, I write capital redemption reserve account. So that is 3 lakhs. So we don't have general reserve and profit and loss account. Then this is nil. Then next we have the current liabilities. Now what is the current liabilities? 10 lakhs. So I write it as it is. Current liabilities is 10 lakhs. 12. So 12 lakhs, 13 lakhs, 16 lakhs, 26 lakhs, 50,000. So the total is 26 lakhs 50,000. Then, so we also have the bank loan. So in this we have the bank loan. Bank loan is to add 1 lakh 50, 27 lakhs, 28 lakhs. Total is 28 lakhs. Now, here we have the fixed assets. 28 lakhs. If you can see the balance sheet here, 28 lakhs. Then we have the cash and cash equivalents. Fixed assets, 28 lakhs. Now in this cash, there is a balance of, if you can see here, 2 lakhs balance is there. So I write 2 lakhs plus 2 lakhs through the issue of equity shares, plus 1 lakh 50 through bank loan. So then we will be paying all this to preference shareholders minus 5 lakhs 50. So the balance is nil. So we have the balance sheet at 28 lakhs. So here if you can see here, cash balance in the beginning it is 2 lakhs. Then through fresh issue, we have 2 lakhs. Through bank loan, we have 1 lakh 50,000. Total it is 5 lakhs 50,000. So this 5 lakhs 50,000 we have paid to preference shareholders. So 5 lakhs 50,000. So the balance is nil. So which we will be showing in the balance sheet. Then next we have one more problem here. So in this problem, the following is the balance sheet of Gunjan Limited as on 31st March 2016. The equity and liabilities share capital. We have equity share capital of 2 lakhs. Arrears of calls is 10,000. So totally 1 lakh 90,000. So preference share capital fully called is 1 lakh. Then next, securities premium we have 10,000, investment allowance 50,000, workman compensation fund 10,000, dividend equalization reserve 22,000, P&L account 38,000, current liabilities 80,000, total is 5 lakhs. Now, in the asset side we have the plant and machinery 3 lakhs, building 1 lakh, inventories 90,000, cash and cash equivalent 10,000, Total is 5 lakhs. Now, the directors of the company decided to issue 400 equity shares of rupees 100 each and 50,000 debentures. So, they are raising the funds through equity shares and debentures. The redeem preference shares at a premium of 10%, raise a bank loan to the extent necessary to complete the redemption, to maintain minimum cash balance for operations rupees 15,000. So we have to maintain a balance of cash of rupees 15,000 here. No trace could be found of 100 preference shareholders. You are required to give journal entries in the books of the company and draw the balance sheet after the redemption of the preference shares. Now let us see what is the value of preference shares here. So preference share capital is 1 lakh. So it is being redeemed at a premium of 10%. So premium of 10% means it is 1,10,000. So I will write here the amount needed capital is 1 lakh. Premium money is 10,000. Totally it is 1,10,000. This is the amount needed. So to raise this 1,10,000, they are issuing 400 equity shares of rupees 100 each. So issue of equity shares 400 into 100, that comes up to 40,000. Then next we have to raise a bank loan. Then next, first thing is we have to adjust for the premium of 10,000. Let us see if there is a securities premium account here. See, there is a securities premium account worth rupees 10,000. So which can be adjusted for making the premium. So securities premium account 10,000 is there. So it will be used for premium. That is 10,000. Next we have these reserves here. Investment allowance reserve, workman compensation fund, dividend equalization fund, profit and loss account. So all these reserves we can make use of. They are all divisible profits, so which we can make use of. But here workman compensation fund is 10,000. Out of this there is a claim of 4,000. So 10,000 minus 4,000, 6,000 we can make use of in this workman compensation account. So see here, we cannot make use of this investment allowance reserve. This is not a divisible profit. So we can make use of is workman compensation fund out of this 6,000, then dividend equalization reserve and profit and loss account. So this we can make use of for redemption. So I will write this dividend equalization reserve. Then next one is a profit and loss account and workman compensation fund. So workman compensation fund we have 6,000. Then dividend equalization reserve is 22,000. Profit and loss account is P&L account is 38,000. So we have all these divisible profits. So this we will have to transfer it to CRR account. So CRR account we have to transfer all this. See, dividend equalization is 22,000. Workman compensation fund is 6,000. So from the profit and loss account we will be transferring 32,000. So which will be transferred to CRR account. Now we will write all the journal entries. The first journal entry for issue of equity shares. So what is the issue of equity shares? First one, bank account debtor. So how many shares we are issuing? 400 shares of rupees 100 each. So it will be 40,000 to equity share capital account 40,000 being issue of equity shares for redemption. Issue of equity shares for redemption. Now, the second one will be, see, raising a bank loan, we will raise. First thing is we have to just identify what is the amount of bank loan to be raised. Then, next is for providing the premium. So we will provide it from the securities premium account debtor. Securities premium account debtor 10,000 to premium on redemption of preference shares 10,000 being premium provided out of securities premium account. Now, the next one will be, so we are providing for the capital redemption. So, dividend equalization reserve. So, we will write third one, dividend equalization reserve account debtor, then workman compensation account debtor, then we have the P&L account. P&L account debtor. Now, if you can see here, dividend equalization 22,000. So, we write 22,000. Workman compensation 6,000. So, profit and loss account we don't know. So, we will just calculate that. So, in order to calculate the amount drawn, so what is the total amount needed for redemption? See, amount needed for redemption 1 lakh. For the capital we need 1 lakh. Out of this, issue of equity shares, it is 40,000. So we need 60,000 for redemption. So for the 60,000, we have this dividend equalization reserve and workman compensation fund. So it will be less dividend equalization reserve 22,000, then workman compensation fund 6,000. Both this you minus from this 60,000. So you will get 32,000. So this we will take it from P&L account 32,000. So from the P&L account we are taking 32,000 here. So when I write the journal entry, it will be dividend equalization reserve account debtor. Dividend equalization reserve is 22,000. Then workman compensation fund debtor 6,000. Then profit and loss account debtor 32,000 to capital redemption reserve account 60,000 being amount transferred to CRR account. So this is the amount to be transferred to CRR account. Now, the next will be, so we have transferred the amount to the CRR account. Next, we have to find what is the bank loan we have to raise. So in order to see that, we need what is the fund here in the bank loan? Bank balance, it is 10,000. So add issue of equity shares, how much you have collected? 40,000. Then anything else we have? So we have collected 40,000 from the issue of equity shares. Next is, so total money in the bank is 60,000. Now how much they have to be paid? Payment to preference shareholders. They have to pay 1,10,000. What is the balance needed? 50,000. Balance needed is 50,000. So this 50,000 we have to pay from the bank loan. From the bank loan we have to raise. So next I write bank account debtor. Bank account debtor 50,000 to bank loan account 50,000 being bank loan raised. Being bank loan raised. Now, the next entry will be, we will write preference share capital account debtor 1 lakh. Premium on redemption account debtor 10,000 to preference share holders account 1,10,000 being amount transferred to preference share holders account. Last one will be for payment. Preference share holders account debtor 1,10,000 to bank account 1,10,000. This is being payment made. This is the payment being made to preference shareholders. Then, so these are the journal entries we have to pass here. So now we have the share capital. So equity share capital, we have 2,000 shares of rupees 100 each. So we have this 2,000 shares. So this is 1,90,000 is here. So this is 1,90,000 plus we have issued 40,000 worth of shares. So total comes up to 2,30,000. Next is preference shares, 1,000 shares of rupees 100 each fully called. So this is nil. So we have already redeemed the shares, so we don't need it now. So next, securities premium account. If you can see the balance here given in the balance sheet. So securities premium account 10,000 we have made use of. So this balance is nil now. Then we have the investment allowance which will be maintained as it is. Then workman compensation, there is a claim of 4,000. So this claim of 4,000 we have to mention. Dividend equalization reserve is gone. Profit and loss account also is gone. So we will be left with the capital redemption reserve account. So I write securities premium account is nil. Investment allowance reserve I will write. This compensation fund claim pending 4,000. So that I will write here. Then dividend equalization reserve, it is over. Then we have in place of that we have the capital redemption reserve account. So that is capital redemption reserve is 60,000. Then from the profit and loss account, out of 38,000, we have taken only 32,000. The rest of the 6,000, I write it here itself. Then we also have the non-current liabilities. We have the bank loan is 50,000. Then current liabilities. Now what are the current liabilities here? 80,000. So this 80,000, I write it. 80,000. So the total will be 60, 70 plus 50, 1 lakh 20. 1 lakh 20 plus 80 is 2 lakhs. Minus 32,000, 6,000. Then next one, they have issued debentures. So the debentures also we have to mention here. Debentures. So debentures worth 50,000. 50,000 they have issued. Then there is a bank loan. So what is the bank loan here? So here in the bank we have a balance. See the opening balance here. What is the opening balance at bank? 10,000. So bank balance is 10,000. So we have raised from equity shares, we have 40,000. From debentures we have 50,000. So totally there is 1 lakh. Then we have to leave a balance of 15,000 here. Less balance to be maintained. 15,000. So totally we have 85,000 balance in the cash, that is bank. Now what is the amount needed for redemption? Amount needed for redemption is 1,10,000. Out of this we have 85,000 we have. So the rest of the 25,000 I have to make a bank loan. So I write bank loan 25,000. So I am writing 25,000 for the bank loan. Then the next, what is mentioned here? No trace could be found of the holders of 100 preference shares. Now these 100 preference shares, I have to pay 100 into 110. So 100 into 110 will be 11,000. So these 11,000 shareholders, there is no trace of them. So I have to mention that in the balance sheet. So outstanding preference redemption amount. Outstanding is 11,000. So 11,000 is outstanding. So we will have to show it in the balance sheet. Next we have current liabilities 80,000. Total is 5,60,000. Now in the asset side, we have plant and machinery 3 lakhs. Then we have the buildings 1 lakh. Then cash at bank will be 11,000 plus 15,000. So that will be 26,000. So the total will be 5,16,000. So the total is cash at bank is 26,000. So this 11,000 is the amount which has not been paid to the preference shareholders. 15,000 is the balance to be maintained here. So this total is 5,16,000. With this, we come to the end of this session. Hope you have all followed it. Thank you.